G'day YouTube, Max Wright here, and lots of action in the markets the last couple of days. So today we're going to be talking about the good, the bad, and the ugly about Bitcoin, world markets, how to prepare your portfolio, how to prepare yourself, how to prepare your situation. And so I think it's going to be a pretty good video here today. So go ahead, hit that like button, hit that subscribe button, and let's get into it. By the way, before we get started, did you enjoy the video series? I know we have a very educated crowd on this YouTube channel. But I wanted to do that as a way for the newbies to get in. So I just completed the video series, 9-part video series, everything a newbie needs to know about Bitcoin. It just got fantastic feedback so far. It'll be a playlist link in the description of this video. So if you want to check that out, please check that out. I want that to be your go-to thing. When any of your friends say, hey, what about Bitcoin? You say, boom, watch this video series. And you're going to be up to speed very, very quickly, and you can help them tremendously. So have that as a tool at your disposal, ready to give away. And by the way, I messed up the link yesterday. So if you didn't watch part 9, just go and find the video from yesterday. The link in the description has been corrected, and you can watch part 9, the finale. So hope that helps. All right, let's take a look at what's going on in the world here. So we've seen Bitcoin go down a lot, a good 15-20% drop down. We wicked all the way down to 40,000. By the way, right now, this is the Dow Jones chart. I'm just setting the stage here. So Bitcoin got hurt, and as usual, when the Dow Jones or the broader markets get hurt, Bitcoin gets hurt too, and to a larger degree. When things are going well, Bitcoin does well, and to a much larger degree. And so that's what happened. So let's kind of track what happened here in the last 48 hours for Bitcoin. Who was buying, who was selling, where was it come from? And so we know a fair amount about this actually. The demographic of people who were selling over the last 48 hours, driving that prices down, were two things. Asian traders, okay? The vast majority of that selling pressure came from the Binance exchange. That is an exchange that services mostly the Asian community. And also, as I said, the demographics are the traders. The selling was people who have Bitcoin on exchanges, ready to go, not the long-term hodlers who are holding on to it. Coincidentally, the buyers during this time have been the long-term holders. So this is setting up something, in terms of the on-chain metrics, this is looking very, very good for Bitcoin. Now, don't go and place your buy order just yet. We've got the bad and the ugly to deal with in just a moment, but just so we understand what's going on, we have out of Asia, we have a lot of traders liquidating, right? We have a lot of people in America, in the Western world, and the long-term holders buying the dip and taking it very, very strong hands, not leveraged. People who want to keep it, hold it, and just want to hold Bitcoin forever. So as a result, when the hodlers buy, they buy and take it off exchange, put it in deep cold storage, right? And you can see the outflows of coins doing that. So we can actually see who's buying, who's selling, and where this money's going. And we can see the available supply of Bitcoin has actually shrunk as the traders sell and the long-term hodlers scoop up and take it off market. The long-term picture for Bitcoin is very rosy. But let's understand why did the selling pressure come out of Asia. I should think most of you have heard about this story. The company named Evergrande, one of, if not the largest real estate development company in China, missed its debt payment just on Monday. We've had rumors of this for a couple of weeks. And it seems that the Chinese real estate market is collapsing. Something that was decades overdue. I think we've all seen the documentaries and the footage of those ghost cities, just literally entire cities, just skyrise after skyrise after skyrise, hundreds upon hundreds upon hundreds of apartments, no one living in them, just complete ghost cities. So it looks as though that has started to unwind. However, well, first of all, that has got the whole world in a very scary place because the contagion from that is huge. So to begin with, Evergrande had a $300 billion debt payment they were supposed to pay. They have failed to do that. What does that mean? So it's doesn't just hurt them. Who are all the people and all the banks, all the insurance companies, all the pension plans, all the institutions all around the world who that money is owed to? So now their balance sheet has to write that debt down. It's like right now, Evergrande's debt is, you can buy it for 25 cents on the dollar. What that means is the market is expecting you're going to get maybe 25 cents on the dollar. That's about it. So what this happens is, now at the end of quarter, at the end of month, at the end of years, there's different corporations, pension plan, different rules, and they're all in different jurisdictions, right? So there's a contagion here that will happen over weeks and months, which is, okay, at the end of quarter, some company who had a large position in Evergrande debt, all of a sudden the law mandates that they have to write that debt down because it's been defaulted on, and you're not going to get it all, and you now have to realize that loss. And it appears on a bank in Thailand, on some investment firm, on some hedge fund, on somewhere else. Over the next few weeks and months, it starts to appear on balance sheets. And this is where you get that worldwide contagion possibility. Okay? So what's been happening for the last many, many, many years is that whenever anything like this happens, they're too big to fail. Government steps in, prints up a whole bunch of money, and rescues it. The Chinese government is not doing that. We've got the US government talking about tapering, kind of suggesting they're going to start pulling back in this realm as well. We've got the Chinese government flexing their muscles, saying we're not going to bail them out, at least not fully. And so the moment this happens, because what we have, there's just so many zombie corporations, so many zombie institutions. And again, if you factor in the contagion from all the people who that money is owed to, all those institutions, pension plans, etc., then as soon as that one of those debts is not bailed out by the government, then you have that contagion effect, right? And so the moment there's a fear that the government is not going to come in, print money, and save the situation, every single person in the financial industry knows, shit, we're in trouble. We have a promise here, government. We make outrageously, ridiculously speculative bets. When it goes up, we put the money in our pocket. When it goes down, you bail us out. That's the deal. If we're going to have to suffer the losses ourselves, we've got to exit these extremely risky positions. And that's a mass selling event, mass liquidity. Okay? So that's what's happening now in China. The question is, and many people are saying it, you see it right here on the Evergrande, world's richest banker says China's Lehman moment has arrived. What do they mean by the Lehman moment? They mean Lehman Brothers. You remember 2008. There was a cascade of events that happened. The first event, there was a butterfly wing flapping on the other side of the world. The Icelandic stock market crashed, right? And then weeks and months later, other things happened. There were a lot of banks in England which were invested in the Icelandic stock market for some reason. I don't know. They had to write those losses down eventually, weeks and months later. Then it trickles down into the US. Then it gets into bigger markets. It gets into different institutions. And the domino effect hits, and you get this Lehman Brothers collapse here in the US. And then that kind of triggers the whole global financial crisis here. And so what a lot of people don't remember is around the time of just about a month before Lehman Brothers, maybe 1 or 2 months, there was another big institution that got bailed out. It had failed. The government said, no worries, we'll step in and we'll bail it out. Lehman Brothers happened a month or two later, and the government says, we can't keep doing this. We're going to have to let it go. We'll restructure it. They dragged their feet. They didn't come up with a solution quickly enough, and it caused the mass panic, mass liquidation, and now it's all hell broke loose, and you ended up with the 2008 global financial crisis. At this point, I would like to, I'm going to paraphrase it because I can't remember it exactly. It's a quote from Hayek, and it says that the longer the boom, the deeper the depression, right? So in Austrian economics, the crash is not the problem. The boom is the problem, right? And so the longer you get the boom going, eventually, the government bails things out. Companies are not allowed to fail. Companies are not allowed to go bankrupt. There should be lots of little small events happening that just constantly just refreshes the market, just clears out the clutter, clears out the bad companies, clears out the bad debt. Should happen often and frequently, and you get no major events. But when you have wise and wonderful men in Beijing and Washington who want to get elected, and they say, don't worry, we're going to make the economy look good. They goose the markets, they goose everything, they protect everything from falling down. What happens is you don't get the lots of little events. You get one big event at the end. That's what Hayek was alluding to, is saying the longer that goes, the bigger the crash. Now, what's of interest here? We are currently, so 2008 was the last crash. We're in 2021, it's been 13 years. We are currently since the beginning of the United States, since the beginning of the Republic, 1776, I think we have had, if my memory serves, it's 49 booms and busts. They typically last 4 to 7 years. This is the longest boom in history. Longest boom in history. So heed Hayek's words well, right? If this is that Lehman moment, if this does spread to other countries, other banks, other institutions, the dominoes go around the world over the next weeks and months, then we could be looking at one hell of a market crash. Okay? So that is the ugly. That is something to be concerned of. So we have this, I guess you can call it set of scales. You've got this situation, the on-chain metrics for Bitcoin look extremely good. The world economy looks extremely bad. Whether this Evergrande situation is the Lehman moment, I don't know. Maybe they manage to kick this can down the road a little bit longer and we get another 6 months, another 12 months, another 18 months, another 2 years. I don't know when that's going to happen, but know this, Bitcoin will lose to the big markets. If you go back to March 2020, COVID lockdowns happen, stock market gets hit by a good 25-30%, Bitcoin gets hit by 50%. Okay, going to get hit big when it gets hit. So in that balance, in that scale, Bitcoin on-chain metrics looking great, world economy looking dangerous. I don't know which way it's going to go. If it goes, Bitcoin's going to go down significantly. I just got a text from a friend who's like, started, all the pennies are starting to drop. And he was like, oh, Max, I thought you were an idiot. It's like, why did you have so much money in cash? And it's like, I get it now. Okay, you're going to be able, with that cash, you're going to be able to buy Bitcoin at very, very cheap prices. Now, remember my prediction. I've said it over and over and over again for a long time. When this crash comes, because it is coming, I don't know if it's today, next week, next month, next year, but it's coming with 100% certainty. The Bitcoin price will get hit and the altcoins decimated. So understand all of those things coming in. Like they are certainties when that big crash happens. And it's going to happen when you least expect. So we've had this little scare of a moment. What I would not surprise to see is there a little bit of a dead cat bounce, maybe a little bit of a recovery here. So again, there's two scenarios. This can be a permanent recovery. I say permanent. This can not be the Lehman moment. It gets solved somehow. The powers that be rescue it. It's not a good thing long term, but they kick the can down the road, and then whatever. We're in with it. It's the same as what it was 2 months ago. But if this crashes, if this hits hard, and this is the first domino of many that fall around the world, you have to understand, you have to be prepared that Bitcoin will get hit hard and all cryptocurrency will get hit hard. So I do want everybody to know, I just yesterday said about exactly the same price as it is now. Let's take a look at the Bitcoin chart real fast actually. I think, what are we looking at here? So Bitcoin's at 43,000. So most of you will know I had a leveraged long open position on Bitcoin. I think my buy, if I sold it, I closed it out at a small profit. I think I bought it. The average buying price of this long position was 43,000. I closed it out at 43 and change. So we're still kind of there and thereabout, even though the dip last night took us down to 40 and back up to 43. Just so you know, I'm out of that long leverage position. As it stands right now, I have no leverage position, and I think that is a very, very wise thing for everybody to do. Because when the market falls, it's going to fall hard, if it falls. I get it. Okay? So let me talk a little bit more about stuff. Okay, so I wanted to let everybody to get that. I am out of all leveraged trades. No leverage whatsoever. What can you do? Let's say this is a Lehman moment. And right now, this is like, you've still got a little bit of time to act. What can you do to protect yourself in the short term? Let's talk a little bit about that. Number one, I want you to just go back to March 2020. You kind of lived through a scare. It didn't last long and it recovered quickly and it wasn't that bad. But think about what happened in March 2020. Think about what you tried to get your hands on and couldn't, right? Right now, you can probably get your hands on things quite easily, right? I'll refresh your memory. Guns and ammo were very, very hard to come by. Cash was hard to come by. Precious metals were hard to come by. Fortunately, we have Bitcoin, extremely liquid market. That trading didn't stop for a beat, and it was very, very easy to get your hands on Bitcoin. So understand that. So I remember I was halfway through a point earlier and I abandoned it for something. I want to get back to it. Remember my long-term predictions. You've been hearing it over and over again on this channel for weeks, if not months. When that crash happens, Bitcoin will get hit hard, and I think it will be one of the first to recover. And what we're seeing with the on-chain metrics kind of goes nicely with that. And let's go back to, we'll head on back to all the way back to this moment right here. This is the moment. This is March 2020. We have this big drop off in Bitcoin, down 50%. Let me get that off the screen. We'll blow it up a little bit. Okay, we have this March 2020. We come into this. Bitcoin pops down here, goes down to, like, goes down from where? We're at 10,000, goes down to 37,000. Let's call it that. It's a 60% write down. And then we come back very, very strongly in the next weeks. And in fact, not only that, over the following months, you know, so from March to March, basically, in that 12-month period, we go from 3,000 to 60,000. It's a 20x, okay? Of all, now, this can be a big, big, big crash. That's the potential of it. I don't know how fast it's going to come back, and how deep it's going to go. And when I say it's going to come back quickly, that is relative to other assets. Very important for you to hear my prediction clearly. Relative to other assets. This could be a much bigger drop. It could be much more devastating, and it could take longer than March 20. March 20 was like weeks, and we came back a long way. And I think within a couple of months, we were back and recovered that 60% loss. It may take longer, but relative to other assets, with Bitcoin is going to come back faster than all of the other assets, is my prediction. Because remember, if this is just a market dip, but nothing really breaks, then it'll be a fairly short-lived thing. Bitcoin will have another probably 100 million users after a few months, and just the network's bigger and stronger, and people will understand that they'll be a little bit more scared of the traditional system, all the things that tie into Bitcoins, right? So that's a good thing for Bitcoin. But let's say there's a big drop, and now we have like things breaking, like major insurance companies, major banking sectors, major institutions failing. And what that does, it's a broken link in the chain, and so the whole transfer of money and wealth and credit around the world seizes up, and bad things happen. Well, in that scenario, the whole world is going to see that the Bitcoin, the cryptocurrency community, and all of its DeFi, and all of the things on Ethereum, and all of the things, and Bitcoin as a money, and still being able to use, all of those things still work perfectly well. And all they're just going to see, if there's a bail-in, forget it. Like, you get a haircut in, with Bitcoin, you're going to get a haircut in price. The price might go down 50, 60%. Who knows how much it's going to go down. But in something else, if a bank fails, this might be your cash account just gets chopped in half. It's not the value of it goes down, like the number of units in there gets chopped in half. The whole world is going to see that Bitcoin, the cryptocurrency world, is infinitely more robust, is infinitely more dependable, and is actually the future to solve all of the problems of this broken market. And so that is going to bring an avalanche of people running to crypto to get themselves out of the horrors of what's going out there. But not immediately, because, as I said, the price of crypto could well get hit hard. But again, the on-chain metrics of all these people, very, very strong hands holding crypto, that tells me a couple things. They know something. And there's two things to kind of know. The future is very bright for cryptocurrency. It's hitting its hockey stick moment right now. And over the next couple of years, right now we're at 100, 200 million users. By 2023, 2024, we're expecting about 1 billion users, right? So part one is just, okay, it's a cool play on that side. But also, the other part is, I think a lot of those investors understand the fragility of the existing system and know if things can freeze up. You just can't sell your stocks. And if you can't sell your stocks, you can't get your money. Things like that, that's going to become prevalent when this next crash happens. Like I said, maybe Evergrande is that Lehman moment, maybe it's not, but these are the kind of things that you really, really need to think of. So, critical takeaways from this video. I wouldn't be in any leverage position. Get your portfolio where you want it to be. I am still a majority crypto. I understand that the price may get hit in a significant way. I'm well aware that may happen. I also have a fairly large cash position, which means I'm a strong hand. I will never have to sell my crypto I can last for years and years and years and years without having to sell my crypto. So I've become a very, very strong hand, because you do not want to have to sell your crypto at half price or a quarter price. That would be horrible. Okay, so I've got this strong cash position. So I can, if it goes down, 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 I can wait. It may take 6 months, may take a year, may take 2 years. I can wait that out easily and jump back in if I need to. Okay, I've got plenty of the supplies: guns, ammo, cash, food. Did I mention food earlier? Have long-term food supply. If it goes real south, and it could, you might see disruptions in food supply. Right? Take your mind back to March 2020. Right? There's fear about this stuff. I remember you couldn't buy rice. Rice was gone. It was because rice stored well. Okay, canned goods gone out of stores. So right now is a really, really good time to do an inventory of your preparedness and make sure you are prepared. I don't know if Evergrande is going to be that Lehman Brothers moment, but it certainly could be. That is definitely, definitely, definitely on the cards. An absolute possibility. So what I suspect, look, short term, I think you've got a little bit of time here. Let's talk about Bitcoin price a little bit. This is very, very concerning. So it could be quite a nice, neat A, B, C correction before we head off. This right here, actually just the shape of this candle, by the way, this is very, very bullish. It's at the bottom of a trend. It hasn't closed yet, to be fair. We've still got 7 hours to go. And it's only a daily. But this long wick down with the body up high, it is actually a trend reversal candle, right? So this could be A, B, C, trend reversal. And that's what I think we're going to have in the short term. We might have a little bit of a reversal. But probably within a week or weeks, I may even just sell a little bit of my crypto and just reduce the crypto holdings and go into cash. Remember, you've got the issue of when you're in cash, and if banks, etc. fail, you might get a haircut from your bank account. So take measures against that, right? Probably below the FDIC in short amounts, you're going to be fine. Take physical cash out. You just go and tell them, hey, I'm thinking of buying a boat. Give me a whole chunk of cash. If it's a large amount, you might need to call ahead. They will ask why, and right now it's going to be easy. But after the shit hits the fan, all of a sudden you'll find they're just not going to give you the money, right? So I would have some cash on hand. I would do that. What else? So yeah, this could be an ABC correction, and we go up a little bit. I suspect probably the highest probability thing is we head up a little bit, and then in a week or so we roll over and head back down and go and break new lows. I think that's probably the highest probability situation. Okay, but it's not a certainty for a long stretch, by a long stretch. It is possible that this Evergrande situation gets papered over, Chinese government comes and bails them out, and we kick the can down the road for another 3 months, 6 months until the next nasty thing. That is my dream among dreams, is that they manage to kick the can down the road for about 12 months. Let this Bitcoin cycle play out. I want this to be the case so much. Bitcoin price will be $200,000, $300,000 in 6 to 12 months. You cash out, you sit on cash for a little while, you wait for the world to crash, and you come in and buy up the bargains. That's the dream scenario. It might not necessarily happen that way. It could, but what we could be seeing is we're already in that down spiral. And for the short term, everything just goes down from here. So I say in the short terms, like here, so I changed my definitions there. In the real short term, like I wouldn't be surprised if we see a little bit of a rally here, up to like 45, something like that. But then we kind of roll over. So yeah, something to consider. I'm very, very, very cautious of October. And I also wanted to point out the 30-day cycle. I think I made a video about this about here, that the lows at the end of month, last Friday of the month, and the highs middle of the month, it looked like it's playing out, and that was like a warning sign. I think actually I made the video here. So be careful about the rest of the month. Now that we are headed up again, I'm very concerned about this cycle, which played out month after month after month. The highs in the middle of the month, right? The blue lines are the last Fridays of the month, and it represented all the lows, right? So again, it looked like that we could be heading back into that. But if we start heading down, we could abandon that. So I just wanted to draw your attention to that. Maybe we get a little bit of an uptick here, and then by the time we get into somewhere in October, that might be all she wrote. So very, very dicey times, right? A lot to digest. But I really, really want people, just come up with a plan. If the markets crash, where do you want to be? What do you want to do? Right? You have to have that factor in. But you have to be fine if things continue to go up as well. So I've constructed my portfolio that way. I know if Bitcoin gets hit, it's going to hurt, but I don't have to sell any of it, and it's going to come roaring back very, very quickly. So that's what I hang my hat on when I have the majority of my portfolio in crypto. Okay? All right, guys, that was a lot. I hope it helps, and I hope it kind of gives you a little bit of actionable steps and calm for the next weeks, because it could be a rocky road as this Evergrande situation plays out. We see how it affects other countries, other institutions, and we see the domino effects coming from it. So please hit that subscribe button, hit that like. As it gets to scarier times, I probably will make more videos just to help you guys understand what's going on and keep it set. So you definitely want to be subscribed to the channel. Okay, take care. Bye.